Welcome to the Titans of Industry show. And, today's guest, I don't even need to introduce him. Jim Rogers is one of the legends of Wall Street. And what I really love about his story, and I read many of his books, is that he knew also when to take a pause, enjoy life, and just really make a balanced life, not go after gains and Wall Street his entire life. So currently he's in Singapore, and I love interviewing every time because we get the brutal honesty. Mr. Rogers, thank you for coming back.
Well, I'm delighted. I'm delighted to be here. I mean, there are people who say I was foolish to do it my way, but I did it my way, and I'm very pleased and happy.
Well, you know what? I'm looking at the other side of the spectrum and looking at a person like Warren Buffett, and it doesn't make sense to me. 87, he's going to donate 99% of the money. So okay, so you know what I mean? It's and you've never traveled outside the U.S. Apparently, uh, so it's interesting to see how people live and how people that have made more money than they can count, choose to spend their time. But in any regards, I really want to ask you about the Federal Reserve first, because we saw the Federal Reserve coming out in October 2018 saying we're a long way from normal rates, which to me means that they want to go back to about 5 to 5.5% on the 10-year, which is the historical rate, and that they want to make sure that interest rates are higher. And I would love nothing better, because I would love Washington to think twice or three times or four times before they generate more debt and use our tax dollars. On the flip side, you saw the market going down 20% in December, and then the Fed completely changes his mind. So who's controlling who? The stock market controlling the Fed, vice versa, or is this like a dual relationship?
Well, you have to understand that all of these guys are bureaucrats and academics. They really don't know much about the world or about markets or anything else. They do know about preserving their own jobs. That's that they understand, and their own benefits. So they just don't know. And when they get scared, or when people start calling up and say, "Oh my gosh, you must save me! You must save me! It's the end of civilization, or the end of Western civilization," they don't know what to do, so they panic and they try to go with the market, or they try to go with the tide. It's the wrong thing to do. We've had very few really good central bankers in the world, for that matter, but certainly in America in the past 100 years, 105, 106 years now. So it's not good. It's not good for America. It's not good for the world, but it's good for their jobs, and they're keeping their jobs.
I want to ask you, Jim. It's funny to hear Ben Bernanke about 10 years ago answering to Representative Ron Paul that central banks own gold as quote unquote tradition, and then in 2017, 2018, we hear that they are buying more gold than in the past 50 years. And I'm not even talking about just the Fed. I'm talking about China increasing it, Russia, all these countries that are in Eurasia, Turkey, Hungary doing it. Obviously, we know about Venezuela trying to get their gold from the Bank of England. So, and now you hear about Slovenia and Italy telling, the Italian people, we need to put these bankers in jail if they mess with our savings, and we need to repatriate the gold from the central bank, and we need to shut it down and shut down the financial regulator because they're all, playing with your money. Obviously, this is the rise of populism, but it's also an important distinction with what's going on with gold. Is this part of a long-term trend? What's going on? Because we haven't seen central banks buying gold as frantically in about 50, 60 years here.
Yes, there are central banks buying gold, but whether we like it or not, gold has been around for a few thousand years, and many people like it. Academics can sit and say that gold is meaningless, gold is, all the things that some academics say about gold, but like it or not, you cannot tell a French peasant that he shouldn't buy gold. You cannot tell me that I shouldn't buy gold because I know everybody else is going to buy gold. So like it or not, people, for historic reasons, emotional reasons, insane reasons, for whatever reason, there are many people who know or think they know that in a crisis, gold is the place, gold and silver are the places to be. So it's not going to end, not in my lifetime anyway, not in your lifetime. Gold has been around a few thousand years and it will continue to be around. Yes, there will be people who will sell it at times. Yes, there will be people who disparage it at times. But there are a lot more French peasants than there are intellectuals from Ivy League universities. And when I say French peasants, I mean, common people all over the world.
Sure. And I want to kind of ask you about the dynamics between President Trump and the Federal Reserve. We have not seen a president in a long time criticizing the Fed, almost threatening to fire Fed chairmans. We've just never seen this in many, many decades. This sort of political back and forth. Is this something that you expect to continue, or is this was like a short-term strategy? What do you think President Trump was thinking when he started to say that the Federal Reserve is the greatest threat to the U.S. economy?
Well, as long as things go right, Mr. Trump's going to say wonderful things about everybody, especially himself. He's going to remind us that he's the smartest president ever and the best president ever. We will hear that a lot when things are going right. And when things are going wrong, he's going to blame other people, whether it's the Fed or the Chinese or the Germans. He's going to find plenty of people to blame when things go wrong.
Do you think things are in the U.S.? Do you think that the economy is strong overall? Is it slowing down? Is it entering a recession? Because what I find fascinating about the U.S. is that right now the official unemployment is as low as it's been in about 50, 55 years. But about 10% of the people are living on minimum wage. 10% of the working class is minimum wage, and about half of the working class, so about 75 million American, are earning about 30K a year before taxes. So the middle class economy is dying. There are people that are that have jobs and steady jobs, not like in 2008, 2009, 2010 when the economy was just recovering. But still, it's not like the domestic economy is something to applaud or be proud about. This is not America's wide and miraculous middle class. And then if you look at the rest of the world, it's even worse. But multinational companies that are domiciled in the U.S., they seem to be profitable and generate earnings like clockwork. So is there a disparity between the domestic U.S. economy and how U.S. companies are able to generate profits in a globalized world?
Well, the U.S. economy is less bad than others, but that's because Mr. Trump has spent staggering amounts of money. I mean, I think the debt in Mr. Trump's 2 years have gone up more than any other president ever. So if you give me $1 trillion, I'll show you a very good time. And because of all this spending and tax cuts, et cetera, the debt is skyrocketing. But in the meantime, things are good. People love a free lunch, and many of us are getting more money than we had before. You're right that in the rest of the world, first of all, you're right that in the American economy, while it's better or less bad than others because of all this staggering amount of debt that's being incurred, still many, many, many people who are not quite as, this is not 1959, this is 2019, and the American economy, what it was once before, is not there anymore for many reasons. Main reason, although there are many reasons, the main reason is we're now the largest debtor nation in the history of the world. And when you run up huge amounts of debt, many people cannot run as fast as they did before because the debt is always dragging us down at the government level, the company level, the individual level. So America is not and will not be what it was before because we're the largest debtor nation in the history of the world. Other countries are already feeling slowdown. They're not running up gigantic debts like we are, so they're not having quite the same benefits. But no, it's all starting to slow down around the world, and eventually we're all going to have a very, very bad time.
Now, Ray Dalio compares this period to the late 30s. Do you sort of agree, disagree with this assessment? Mostly because of the deficit spending and the rise of populism worldwide.
Well, yes, but if he means that we're now going to have a major war, I'm not quite sure I see that yet. I see the strong possibility on the horizon, a very strong possibility.
He doesn't say that we're going to have war necessarily. He just compares it in terms of, we had the Great Depression and then a stimulation, and we had the Great Recession and then a stimulation or stimulus. Then we had the rise of populism in the late 30s, and now we have the rise of populism. We had a rising power and established power, and now we have a rising power and established power. It just talks about some of the comparison, but what I wanted to touch with you on is what sort of investments work in these sort of periods, because obviously after 10 years of rising stock prices, the 4 10 year prediction for the S&P 500 is about 5%, 3%. Some measures that people like to use, like the Buffett indicator or other famous ones, are even negative to zero for the 10-year period, because obviously you can't keep multiplying prices without earnings following suit. So which sort of investments does Jim Rogers get interested in times like these?
Well, the U.S. stock market and economy have gone up for over 10 years, the longest in American history. So we know it's not going to last forever. I mean, there's no reason it cannot go on another 10 years, but it never has. So it's unlikely that it will, and the rest of the world is slowing down too. Well, the first thing about investing, you should not listen to me or anybody else. You should only invest in what you yourself know a lot about. You start listening to other people, and if they're wrong, you don't know what to do, or even if they're right, you don't know what to do because you don't know why you bought it in the first place. So it's a terrible thing to do, to make your investments based on other people. The only way you're going to be a successful investor is to invest in what you yourself know a lot about. So then you know what you're doing, why you're doing it, what to do when things go wrong, what to do when things go right. Otherwise, you don't have a clue. And it's hard enough being successful in investing, even if you do stay with what you know, because we all make mistakes. Now, having said that, uh, I don't see many places on the long side around the world to be investing. Yes, agriculture has been a disaster for 30 or 35 years. There are great opportunities there. Venezuela is a disaster, a horrible nightmare. They know it, and they're trying to do something about it. I have learned that if you buy disasters, you usually are okay. In fact, you're usually quite successful a few years down the road. Likewise, Russia is a great opportunity as far as I'm concerned, because everybody hates Russia. It's not a big debtor nation. It has vast natural resources, and they're not going out with huge deficit spending and debt like the rest of the world. So there are places where one can invest, but if you cannot spell Russia, if you cannot find Venezuela on a map, for goodness sakes, do not invest. Please do not invest in places like that. And if you don't know how to drive a tractor and don't know anything about agriculture, please stay away from it. But there are opportunities out there. I mean, right now, the Chinese market is down for a variety of reasons, mainly because they have been trying to cut back on debt in their country. But there are opportunities. I mean, China is a horribly polluted country, terribly polluted country. And so you're going to see great opportunities in the companies cleaning up China because it's so filthy. Even if Europe disappears, the people cleaning up China are still going to make fortunes because there's so much money being spent to clean it up. So, yes, there are opportunities, but please stay away unless you know what you're doing.
Now, Jim, I want to ask you with regards to America. I want to go back to the U.S. markets and to the U.S. economy. Do you think that there's now, and even globally, that there's a relationship between rising wages and the speed at which CEOs will look to automate and use more robotics and machines, etc.? In other words, are we in a world where wages will not rise substantially because humans are essentially, for most jobs, they're replaceable at this point? In other words, should people look at very specific skills that they can bring to the workplace if they want to rise up the corporate ladder and and enjoy wealthy lifestyles, etc. Because just having a job does not work anymore at all.
Well, what you just said has been going on for 200 years. 100 or 200 years ago, in the Great Britain and the U.S., there was this great movement called the Know Nothings, called the Luddites, who went around smashing machines because they didn't like the fact that people were losing their jobs to machines. But needless to say, the world has done extremely well since in those 200 years with ups and downs. I mean, there are many people who hated electricity because electricity took a lot of jobs away. Well, I don't think there's anybody listening to this who would say that we should get rid of electricity or get rid of machines, even though they cost a lot of jobs. Right now, we have various things taking place in technology. Blockchain, for instance, blockchain is going to put a lot of people out of work. But just as I said, electricity put a lot of people out of work too. So blockchain is going to change everything we know. But on the other side, there are going to be a lot of people who have new jobs, new industries, new everything. It's been going on for at least 200, probably for 2,000 years. But the last 200 years since the Industrial Revolution has been the most dramatic point where machines or automation, or call it what you will, has replaced people's jobs. Yes, it's going to happen, and yes, you need to adapt, and yes, you need to be prepared. But don't worry, any more than we're not going to get rid of electricity or machines. The world's going to survive. But you do need to be prepared. I mean, you can't just sit around and look out the window and say, oh, I don't have to worry. We all have to adapt.
With regards to China, you obviously believe that this is the Asian century, and I want to ask you: do you think that Chinese investors will be very interested in U.S. companies? Do you think that in about 10 to 20 to 30 years, most of the shareholders in some of the blue chip U.S. companies will actually be Asian people that own them, with a lot of Asian influence, Asian boards? Just a majority of the equity markets will be owned by the Chinese, the Indians, the Indonesians, the emerging Asian countries. Whereas obviously now we know that many of the stakeholders in these companies are baby boomers and U.S. funds, pension funds, etc.
Well, throughout history, where the money, people with the money are the ones who own companies and own economies. The U.S. replaced the British, and in the U.S., the South replaced the Northeast as far as manufacturing was concerned. I mean, these kind of movements have been taking place, again, for forever throughout the history of the world, and including in the U.S., Great Britain, etc. Yes, it's happening now. The largest debtor nation, well, America's the largest debtor nation in world history, but look out the window. I mean, Europe, all those European countries are huge debtors now. Even Japan is a huge debtor now. There are plenty of big debtors in the world, and the largest creditor nations in the world are in Asia. I mean, Korea, China, Taiwan, Hong Kong, Singapore. I mean, the money's here. So, of course, they're going to be the investors, the shareholders, the creditors, and the owners of businesses. But that's the way the world has always worked. If you don't know that the world economy is moving to Asia, please do a little research.
Do you think that the situation between between China and the U.S. in terms of the trade deal, do you think the tariffs are a good strategy by the U.S. or not so smart in this regard?
Well, there's never been a successful trade war. Nobody's ever won a trade war. Open markets and open trade have always been better for the world. Throughout history, the countries that have closed off have gone into decline, and the countries that have opened up have grown, surged, and boomed in many cases. So it doesn't matter what I think. The facts are pretty simple. History is pretty simple. That's the way the world works. Open markets and free trade is good for everybody. Yes, some people suffer, but in America, for instance, if 2 million people suffer, we have over 300 million people, and most of them benefit. When goods are cheaper and better quality, 300 million people benefit. Maybe 1 or 2 million suffer for a while, but I mean, it's pretty easy to check that open markets and free trade is much better than trade wars, tariffs, and restrictions.
Understood. What does history tell us about this rise in taxing the rich? We see that in America now three separate politicians have raised the agenda of either taxing the rich, taxing the states. It doesn't matter. It's attacking the wealthy class of the nation because of obviously what has happened with the wealth gap in the United States. Is this a good strategy? To me, it looks like this is just giving the government more tax dollars instead of fixing the real situation of what we do with tax dollars.
No, of course. I mean, 50 years ago, New York was the largest, richest state in the United States. Now there are many states that are larger because New York kept spending money, running up debt, and raising taxes. People voted with their feet. Look at Connecticut. 50 years ago, Connecticut was the soul of prosperity. Everybody wanted to live in Connecticut for many reasons. Now Connecticut is almost bankrupt. They kept spending and raising taxes, spending more. Now Connecticut's almost bankrupt. I mean, it's a pretty simple thing. You can tax the rich all you want, but the rich are going to move away, and they're not going to invest where they're taxed. They're going to invest in Florida or Texas or other places where life is better. They can make more money and get higher returns on equity. Sure, do it, and many people have tried it throughout history. It's never worked because the rich are smart enough to move away. Capital is going to go where it's treated nicely. Capital doesn't care if you're a Democrat or Republican. Capital cares about whether it's treated nicely and whether it can make a return. And it's going to go where the best returns are. You can attack it all you want, but the capital is going to go to places where it can boom. Korea, Japan, Taiwan. I mean, Japan at one time. China. Capital wants to go where it's going to make money and where it's not as taxed. Tax it all you want. Tax it all you want, and you will see what will happen. It has always happened when you raise taxes too much.
Jim, one last question. The gold to silver ratio, a topic that has bugged many people for a lot of years now. It's about 80 to 1 now. Obviously, we all know the historical ratio is about 16 to 1. We know the output from the earth ratio is about 10 to 1. We also know that silver has been demonetized by central banks. So they buy gold, but they don't even buy silver. We know it's a very tiny market. What are your thoughts regarding this quasi industrial metal, precious metal, monetary metal, which is called silver? How do you measure it? How do you value it in comparison to gold or in compared to any other thing?
Well, I'm not buying either, and I own a lot of both, but I haven't bought either since 2010. But having said that, if I were going to buy precious metals, obviously silver is the place to be. On any historic basis, silver is much cheaper. It's much further down from its all-time high. The ratios you talked about, I mean, there are many reasons that silver is a better buy at the moment than gold. I am not buying either, but if I were, I would be buying silver.
Jim Rogers, hey, if you can, let everybody know it's easy to get access to all of your books on Amazon. Is that correct?
Absolutely, yes.
What's the latest one that people can really easily check out?
Well, the easiest in English is called Street Smarts. It's my most recent book. It's a couple of years old, but it's my most recent in English.
Jim, thank you very much for taking the time. And it's jimrogers.com if you want to check out his amazing adventures around the world. Obviously, go to Amazon to check out the books. And, sir, I really appreciate it.
Let's do it again sometime. Thanks.